Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Good morning. What is going on, everyone? You guys are having a good morning, good afternoon, good evening, wherever you are in the world. Have some jazz going on in the background. Quick question before we get started. Do you guys listen to music while you're marking up charts? Is that how you guys get focused at all? Seems to be a thing for me. Aiden and I really like to listen to jazz music in the morning. It's kind of cheesy, but, works for us. We have a lot to go over today, a lot of great setups to discuss with you all. As always, drop it down in the chat. Where are you guys from? What pairs you guys looking at today? It's midweek, Wednesday. Have 3 trading days left. We have a lot of time. If you guys do not remember from last time, we had started our very own track record for complete transparent purposes on all of our analysis and trade ideas sent within each of the live streams and in our VIP Discord channel. So if you guys do not have access to that, I will go ahead and drop that here very shortly. We are having an amazing start to the year so far. We've been trading for about 10 trading days now. We started on the 9th of January, and it is just about the 19th. It's the 18th, but it's just under 10 trading days. This will be the 10th. Let me just drop this right in here. And we are already up about 16% using 0.5% and 1% risk. All right. Good morning, everyone. Rochelle, good to have you on here. From Texas, from Italy, USD JPY. Yeah, UJ. I'll talk about UJ today. UJ had a very interesting play. Came into a very interesting level of supply and had a beautiful reaction from it. Good afternoon, Joel. Good to have you on. We wait just a few more minutes to let people trickle on in here before we go ahead and get started. Let's get this chat going. Where are you guys from? What pairs are you guys looking at this morning? I got my coffee and got my music. I'm all ready to go. So I actually just recently moved in to my new place. It's really cool, actually. That's like the whole skyline. It's really nice. I can't really show you because I can't move my laptop, but I have this new standing desk. That's why I'm standing up. It's really interesting. What I've learned is, if you stand most of the day, while you're working, it's a lot better than sitting down. I guess apparently, I didn't know this. I learned this from one of my health coaches. Standing or sitting, human beings are not meant to be sitting. Right? That's not how the anatomy was developed, I guess. So it's really, really bad for you to sit down. Apparently, I don't know. That's just what I've been told. So went out and bought myself a standing desk. Now it's awesome. Keeps me going. Keeps me proactive. CAD Chef, UJ. Yeah, I'll talk about CAD Chef today. Good morning from Toronto, South Africa, Naples, Florida, Jamaica. Good to have you guys on. US 30. I don't know why you guys trade US 30. Everyone trades US 30. I only trade Forex, guys. I will not be going over anything but Forex pairs. Kenya, have you on, guys. Awesome. A few announcements for those of you who are part of the VIP program. We will be releasing that course that we talked about, that 5th and final, well, I wouldn't say final, but probably final course. Going to really encompass pretty much everything that we have discussed in the entirety of our trading strategy down into one course. And that will be purely application based. So pretty much teaching you guys how to really go about top-down analysis, how to start off with a blank chart and then pretty much analyze that all the way down to a potential setup if there is a setup. So that course will come out hopefully within the next couple of weeks. If not early February, and obviously that will be completely free for you all who are currently a part of our VIP program. So stay tuned for that. I'm really excited about it. And just remember that we have started that track record. I am continuously updating new trades that have entered into, that we have gotten into. We have had quite a few over the past few days since the start of the new week. So definitely take advantage of that. I do have one for the live streams that we have today, and I will be dropping all the trades that we talk about in that particular Excel file, so you guys can have access to all that data and can track that. All right, Portugal, Italy, Stockholm, Sweden, nice. I actually have a friend in Stockholm. It's pretty cool. GU and EU. Yeah, I can discuss that. Let me quickly check. Wasn't a part of my list this morning, but I may talk about it. I'll talk about AU and NU. Those are very interesting, and they'll all pretty much tie together. I mean, dollar is overall weak, as you guys know, so we want to continually buy, XXX USD across the board. It can be very easy, especially if you're a relatively new trader. It can be very easy to get caught up in the potential reversals of the market, right? The market loves to present potential reversal formations for you guys to take advantage of. Any tiny little break of structure on the lower time frames or any little volatile move in the opposite direction, you automatically think that it's reversing trend. Well, let's look at it from the opposite perspective, right? Could it just be a liquidity run against the overall, buy traders to sweep their liquidity to then continue to push price higher? Could it also just be an overall pullback? We have to use common sense in trading as well to say, hey, if we're overall bullish, any little push to the downside, we probably shouldn't really be, just immediately changing our bias unless we have a lot of confluence to do so. So just a piece of advice. All right. Well, we'll go ahead and get started here. I know a lot of people will probably trickle on in as we get going, but I'm going to share my screen here in a second. Let's see if you guys have any questions really quick before we get started, because I'm not going to be able to answer questions as I go because I can't see the chat. So I'll take just a few questions really quick, and then we'll go ahead and get started. Rwanda in the house. Nice to have you guys on. How do you join your VIP group? There's no link. Yeah, so we don't have prices on our website. We don't have any of that stuff. What's required for anyone interested in our mentorship program is to book a free call with us. So it's the book a call button's on our website, arielfxtrading.com. And that's just required in order to join our program. We used to be that company that pretty much would take on anyone, but we don't do that anymore. We only take on very serious traders. People who have the same mindset that we do, because it just makes our job a lot easier. And we like to work with just a very few specific people instead of everyone, because working with everyone who may not have the right mindset is just a pain in the butt. So yeah, we have to book a call, just required. All right. Any other questions? No, I don't think so. All right, cool. Awesome. Let's go ahead and get started here. I'm going to present my screen. I'm actually going to turn off the music so that's not a distraction. Awesome. There we go. Okay, cool. I'm going to share my screen here. Everyone, just make sure you guys can see this. You guys can hear me. If so, just drop a yes in the chat, just so I'm not talking to a wall as we go. Just drop a quick yes in there. Awesome. All right, guys. Thank you. I appreciate you guys today. All right, let's go ahead and get started. Really quick before we go, I just dropped a link to this track record. So this has been from the start of January, pretty much from January 9th and onwards. Some of them we discussed a few days prior. I think that prior Friday before the Monday that we started, we discussed quite a bit of analysis within the VIP community, which is why it says the 6th or the 4th. So we're tracking every single trade down literally to the 0.1% return, going based upon half risk or full risk. The legend is in the corner, so you guys can see what that means and see what pretty much everything means here. We do not give stop losses. We do not give partial profits. We don't give any of that. If we did, that would be signals, and we despise signals. Signals are terrible. We do not do that because that creates dependency and not self-sufficiency. As I like to say, that creates peasantry and not anything else. I'm just being quite honest with you guys. I'm serious. So pretty much everything is here, fully transparent. We also have a running graph of the total from the start of the year. This year has been, and I think this has probably been one of my best starts of a year. So in January, I'm up almost, or well, a little over 16% to start the year. And this is using good risk management as well. This just goes to show, guys, that you do not have to over leverage on positions. You do not have to revenge trade. You do not have to, over trade in that sense. So I know this may look like a lot of trades, but you can just see the amount of trades I've been in. I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 17 trades over the past 10 days. So like almost 2 trades a day, which isn't all that bad, especially for smart money. There are a lot of setups throughout all the pairs. And a lot of these are just pending right now. And I'll be going over some of these too. But the live streams, obviously, you guys only have access to the ones we talk about here in the live streams. We're up. I haven't done I think we're up. Yeah, this should be a little higher now because I woke up to more profit this morning on USD Chef. GBP Chef, that should probably be about the same. So yeah, that should probably be sitting around like 4.5%. This is just from the live sessions. And mind you, we've only had 2 live sessions so far. One last Wednesday, and then one last Saturday. So having one today, I'm going to be dropping some more pairs or more trade ideas here afterwards. So stay tuned for that. And obviously, if you guys are not a part of the VIP community who wish to be able to take these trades alongside us, I mean, these are the trades that we're taking ourselves, guys. So these are not just stuff that we just post and just say, here you go. I mean, of course, this is used for analytical purposes to where you can take these trade ideas or analyses and pair it with your own trades or your own markups on your own charts and take the trade if you wish to. Obviously, we're not going to tell you to take it. This is, obviously up to the trader discretion. But these are the exact trades we're getting into ourselves pretty much. I would say 95% of them. And yeah, we're up about 16.5% to start the year. So phenomenal return and using really good risk management. All right, so let's go ahead and get started here here we go, back in here. So all of the pairs that are highlighted in red, these are the ones that I will be going over today. All the other ones, I really just don't have much on. I'll actually talk about UJ because I know some people were looking at that. But other than that, I really don't have much on. So for the ones like Euro USD, I'm not going to go over. However, that doesn't mean that there's no bias for it. There's just no particular setup at all, right? There's really nothing to discuss here. We're kind of just consolidating in a range at this current time. We haven't taken buy or sell side liquidity yet. We're overall in an uptrend, so that's really your bias. And you can kind of depict that through the other breakdowns that I'll go through with the other dollar pairs. So we're going to first start off by talking about AUD USD. So let's look at the higher time frame structure first, right? So overall, we are extremely bullish. I know that we look like we are counter trend bearish, which we are, right? This is a low, high, low, high, low. So truthfully, we really should be not necessarily placing short positions from our prior supply zones, but just being very careful around these levels, but also taking profit from our buys at these levels of supply. However, higher time frame, we have come into a higher time frame area of demand. Back in 2020, when we had that COVID crash that sold off very strongly, we had the sell to buy, the repricing, and then the continuation. So we had that higher high. We did not make a lower low from this. We actually reacted from that level of demand. And now we are pushing quite strongly to the upside. And if we just look at the dollar index, I mean, this is not the DXY, but very similar US dollar. We're absolutely tanking right now. We did come into a higher time frame. And I know it's not shown here. It's actually shown on the DXY. I'm not on the DXY. But if you're on the DXY, it shows like there's an area of supply here that we clearly came into. It's just different price feeds. But anyways, there's nothing stopping this. This is just a trickle-like formation, right? When we have trickle, that's pretty much considered low resistance liquidity. High resistance liquidity would be stuff like this. It would be like deep pullbacks and like an actual trend. This is not high resistance. This is low resistance. So this means there's nothing stopping this from absolutely just continuing to push lower. And I think that's what's going to happen. I think that we can continue to push higher here. Obviously, we're going to have some sort of retracement eventually. I mean, we're not going to just be stuck in this lower time frame trend just like this forever and ever. Obviously, we'll have deeper pullbacks, but we're going to be looking for continuations. So overall, I would not be surprised if price came above this previous swing point. Because we've come into that higher time frame level, the dollar is extremely bearish. We had that reaction. I would not be surprised if we just absolutely blasted off from here. Now, we could see overall pullbacks, and we won't talk about that right now because obviously that hasn't happened yet, and I don't want to confuse you with anything that may not ever happen. So let's go down to a lower time frame here. Originally, we were looking for buys from our overall level of demand here at 6.8 or 6.790. So, just through my 5 years of trading experience, I've seen this plenty of times, and I already assumed that we probably would not pull back here immediately. When price was trading in here, I figured that we would probably, fail to come down into that level and then just continue to trickle. And it's just one of those things that you just have to be involved with for a long time to understand. It's just seeing this multiple times after a clear, not necessarily a clear area of demand, but after a clear continuation that's very strong, that leaves a lot of imbalance. We oftentimes have a very slight pullback and then a continuation to the upside. What this does, eventually we will probably come down into here. Now, we may not actually come down into the specific level, but we will have some sort of overall liquidity run to the downside, whether that be like this or whether that actually be like that, or whether, we just continue long for the time being and then end up sweeping that liquidity like that. So who knows? Eventually, we will have that overall pullback. So hopefully we will come into this level. Now, this is still valid. And this is what I have in the spreadsheet so far. I'm not going to invalidate this setup as of now, but we can see that this is the previous low that created this high. This is the high that created this low. This is the low that created this overall higher high, right? So these are intermediate swing points, and we can be taking advantage of the lower time frame swings. Of course, we have been. We're actually in a trade as of right now that's in really good profit, right? So we can continue to trade with the trend until it breaks, right? So I don't mean that once trend breaks like this, we need to be pulling back to just short off like that. We need to just be looking for higher time frame trend and understanding that, yes, this is the current lower time frame trend, but now this is the higher time frame trend. This is the high that generated, this is the low that generated this overall high. Let's just say we start to pull back now. Well, that would be the entire range of the current trend. So this would just be an overall pullback to continue with the higher time frame trend if we can get back down into here. So that's why that is still valid. This is how we do multi-time frame analysis and understanding the lower and the higher. So my analysis for this particular trade setup, this was actually talked about on the live session. So I actually forgot to add it in the spreadsheet, or maybe I did. I have to go back and look. We talked about this level of demand here. It's actually on the 1 hour time frame. And I said right before market open, because this was market open right here, that was the gap that formed. So right in here, I said that we had made a liquidity run to the downside, right? Sweeping all this liquidity. And we made a higher high. We have then made a higher low, sweeping this liquidity here. We had that clear sell to buy. We started to push back up. We repriced, and then we continued. I wanted that higher high above that high. If you guys recall, if you guys remember me talking about this, and please hold me accountable for everything that I say, guys. I truly want to be fully transparent with you all. So definitely check my work on the spreadsheet. Sometimes I could get some things wrong. Obviously, those in VIP, you guys see all the stuff that I post in the Discord, right? If it's somehow not getting translated over to the spreadsheet, call me out on it. I will be happy to make that correction. So anyways, I did talk about this. I literally said this verbatim. I'm like, if we have to make a higher high first before I even consider buying from this area of demand. And that's exactly what happened. Right when market opened, we made that higher high. So we made that higher high, and then we pulled back into this level. Perfect time, London session open on Monday morning, and we got that reaction. We ended up creating relatively equal lows, had a little bit of consolidation, created more equal lows, but then we had a clear sell to buy. It's a good thing our stop loss was below this overall low. Why is it here and not right here? Well, because if you put the stop loss below this low, I mean, you could do that. I mean, there are often times, times where price could come into that demand and have that reaction, and you could have a really good risk reward with it. However, This is the low that created this overall high. So this is the entire range of this particular swing point. So to be conservative and to be safe and have an appropriate stop loss, we need to be placing it below this low here. And we can see, obviously, we didn't come into it. So if I scale into this, I think it happened to be on the 10-minute time frame. Yeah, this is exactly why we stopped here. So Monday morning during London session, we had the overall pullback. We got the entry, right? But we were just stuck between profit and drawdown, right? Just for a little while. Then we finally had that last swing on Tuesday morning London session, sweeping all of Monday's sell side liquidity. Had a clear sell to buy, and that's where we started to form the overall higher high. We came into this level because this was really our last point of demand. Our last point of demand before the overall higher high was created, before, if we came lower than this level, then we would be breaking structure, and then we could possibly be seeing that overall pullback, right? So that was that LPOR, we like to call it last point of return. While this swept this liquidity and on a lower time frame came into a lower time frame demand in here that filled in balance. So very beautiful trade. Had a little bit of drawdown, but nonetheless, we are still in really good profit at the moment. We're currently holding for a 1 to 8.3. Obviously, we're not in 8.3%, but we're probably up, 46 pips stop loss, maybe about a 1 to 1.5. So not too bad. Stops can be moved to right below this previous low instead of having it below here, which is below that prior low. So we can mitigate a little bit of risk here. So where am I looking to re-enter? Well, we have to look at where the counter trend breaks to when the new trend forms. So this is really where you're going to be seeing a lot of these supply and demand flips. So just from a surface level understanding, right, let's just look at the counter trend, right? We have the low, we have the high. You can consider this is not a lower low, but you can just see the individual swing points that are forming in here. We finally made that liquidity run to the downside, that lower low, that lower high into supply right here. And then we failed to generate a lower low, created that higher high. So in this case, yes, this was the start of the demand right in here. And if you had taken a trade off of that, that would have been a good re-entry trade. However, we didn't get that. And I saw on the 15-minute time frame that we actually had imbalance. So guys, this is a very important piece of advice here. When you come into a level, let's just say that, you have this level here that you're interested in, and price ends up coming into it, tapping into it, and then continuing. But then you miss the trade. You miss that opportunity to get long in the market. Well, then what a lot of people and what a lot of traders do is that they look for anything and everything to prove that price can still come back down and they can get in. Well, let's just say price does come back down. In this particular example, we never did. We kept trickling back to the upside. This is still valid down here. If we get an overall pullback, I'm still looking for buys. But what people oftentimes do is that they'll have this confirmation bias, this already predetermined bias that, okay, I didn't get into the trade. I need to get into this trade. So they do one of two things. They either, if they're more disciplined, they would wait for a pullback. But even so, we already mitigated this level. So why would you look for a pullback? This is no longer valid. And I'm just saying this in general. This is still valid. This particular example is still valid, but I'm just talking about in a general sense. So like this, high, low, high, low. Let's just say there's a demand right here. Price comes into it, then reacts from it, and you guys miss it for some reason. What you guys would look for are one or two things. Either FOMO, you'd have FOMO, and then you end up buying like right in here instead of right down here because you want to chase the trade and you want to catch these home runs every time, which is just so dumb in my opinion. But also, when price starts to retrace, you automatically think that, oh, this is an opportunity for me to get in the market. So you're thinking about it in terms of what you want to see and not what the market is actually telling you. So what if the market's telling you, oh, we actually came into a higher time frame level of supply here. That is why we have failed to generate a higher high here. We came into a supply, and that's why we started to push back down. So most likely, we're probably going to sell off and make a lower low. But you guys are I say you guys, I'm just saying people in general who, feed into this kind of psychology would be like, okay, well, this is a good opportunity for me to get an entry back in the market. So they get their entry and then they end up hitting stop loss. So it's just one of those things where you have to understand that you're not going to take every single trade that you like. It's not going to happen for you. So sometimes you just have to invalidate it and delete it. Now, if this just continues to rise and rise and rise and rise, what is the probability that we actually come all the way back down? And if we do actually mitigate from that level and go long again, probably not that high. As of right now, we have created a higher high above this swing point. So yes, this is the new swing. From this low to this high, that's the new leg. So yes, if when we created a higher high, we would naturally expect some sort of higher low. If we get the pullback, that's what we would look to do into that level of imbalance. 6957, we would take sell side liquidity in here. Okay. So hopefully you're starting to understand, some of the things that a lot of traders do that is really detrimental to their trading. And just trying to help you guys with a better approach and to, kind of understanding the proper ways of looking at the market like that. CAD Swiss franc. So CAD Swiss franc was a beautiful trade that we had from this particular level. It ended up hitting break even, and I'm going to be talking about the secondary position. So I'm not going to go over all of this because just for the sake of time, but we accumulated in price, we swept liquidity, sell to buy. We came into a lower time frame level of demand, and then we made another higher high. So we're continuing to push along lower time frame. In the process of making this new higher high, we formed two areas of demand. We only came into our first level when we originally broke, right, and made a new higher high. We did not come into our second. We used half risk here, half risk here. So we didn't make a ton of money on this trade, but when price ended up taking this prior swing high, stops moved to break even and partials were taken. So, we didn't make a ton of money, but we didn't lose anything, and we actually made a little bit. We ended up coming all the way back down, having a little bit of a reaction, kind of forming this head and shoulders formation. So this is really interesting to me. Are we going to see this huge sell-off and then see an immediate pushback to the upside for this fake out of the head and shoulders? Or are we going to respect the overall structure and just continue short? Because if we look on the higher time frames, we actually did come into that daily 50 EMA, and we are overall very much bearish. And we could easily see a rollover, which I'm actually expecting to happen. However, the only reason why I'm taking this, and I have taken this, I'm in drawdown, I'm just being honest. I have taken 0.5% risk here, right? So just in case, we continue with the lower time frame trend, and this is nothing more than a fake out of this head and shoulders, sell to buy to go long. That's really the overall, analysis for this pair. If we didn't form a head and shoulders and we were in the same situation, I probably wouldn't be taking it anymore. But because of the fact that we formed that retail head and shoulders, I would probably treat this as, we're looking to go bearish. I think the market's probably going to head lower. So, if you guys are in this, we have 0.5% risk on this and a little bit of drawdown. Oh, well, I'm up already 16.5%. So I really don't care. But we'll just see what happens. There's really no other re-entry at the moment. And if we do get a break of structure back to the downside, then we're going to be looking for shorts. Because obviously then at that point, the daily 50 EMA, it is a strong EMA. It's what the institutions use, the 50 and the 200. So, it would just be one of those, one drive, two drive, three drives for an A into B into C continuation, right? Just with the overall trend of the market. So we would be then looking for overall shorts if we do get another opportunity. Euro AUD. So we had a few opportunities in here for those of you who did not get in this trade. So we can see across the board, and this is just really where experience kind of comes into the market. Yes, we are overall bullish on Euro AUD at the time, right? We're making higher highs and higher lows. For one, if we get a reaction from this level of imbalance, right? Because we've created this higher high, we've created this higher low, we've created this higher high again. This is just an overall pullback, right? So we have the level of imbalance in here that formed as a result of these equal lows being run, sell to buy. And that's where we failed to generate the lower low within this overall pullback. We accumulated within a level of demand and we went long. And that's where we started the new trend. And then these equal lows here were actually a lower time frame head and shoulders that we faked out from. So coming into that level, that's where I have my overall take profit, but we are still overall bullish in the market. However, across the board, this is where we have correlation. The Aussie dollar and the New Zealand dollar are extremely bullish right now across the board. So Euro AUD and Euro NZD would naturally push to the downside, right? And we had this trend that is currently forming. Low, high, low, high, low, high, low, high, low, high, right? So we're looking for continuations lower. Why are we looking to do that? Well, one, currency strength and weakness, right? Aussie and New Zealand dollar are strong. So XXX, AUD, and NZD are going short. We currently are in a lower time frame downtrend. we have actually reacted off of a higher time frame supply level. So in all reality, I mean, we could actually really go short here. We could. It's a possibility. We are overall bearish. However, currently we're still bullish. So we have come up into that level of supply in which we swept liquidity from that prior level. Another confluence is the fact that we haven't come into this imbalance. If we are to go long, and I'm not going to be buying from here, I'm going to be waiting for more confirmation first, which may take a while to see. But if we are to go long, this would be the level in which price goes long from. There, in no way am I telling you guys to buy this, guys. Please do not think I'm telling you to buy. I'm just saying, where could price reverse from our trend, right? That's where we need to be taking profit, or taking partials at least. We haven't come into here yet. So any pullback for continuation short from prior supply would be valid. So we had a higher time frame supply and a lower time frame supply. That's why we had two entries. We only got the first. So our higher time frame supply was just this overall level of supply here. Then we had a lower time frame supply level right in here. So that's why we had two opportunities. And we can just see the consolidative nature of the market. Really wasn't a clear trend in this situation. It was kind of maybe redistribution or just consolidation. But we ended up pushing down to the downside, and we are about to hit our overall take profit here, hopefully very shortly. So that is very good. I don't have any re-entries on this, but I just wanted to give you guys an update, especially those in VIP who took this trade. Euro GBP. So we had a really great sell trade and then a long trade that we hedged on that ended up losing, but doesn't matter because the aggregate positions were in profits. And that's the only thing that matters here. So the reason why I was looking for first and foremost overall buys was because we had equal lows. We had this clear sell to buy, and we formed the higher high. So we had a higher high, a higher low, a higher high. You would naturally expect a higher low for another higher high. So we had that clear sell to buy. So that was that sponsored move. And we hadn't come into a higher time frame level of imbalance and higher time frame level of supply yet. We have not done that. So I was definitely looking for longs from that level, and I did lose on this. I lost 1%, and I'm going to update the spreadsheet right after this. But I also won this short trade in here. So counter trend, if we take a look, and we had a buy opportunity from this level of demand last week. Remember, I think it was, last Wednesday we got into this. And we ended up going break even on this because, well, for one, we first had the reaction on it. And second, we took out prior swing point, right? So we ended up breaking even on one of these. It was on this one right here because we took out the previous swing high. And then this one right in here on the lower time frame, I think we ended up losing 0.5% or something because obviously we couldn't move stop to break even yet because we didn't take out the prior high, right? So that's just a general rule of thumb. If you guys are at all confused about where to move stop to break even or when to do it, just have the general rule of thumb be just the previous swing point. It just makes it easier. That's really what I do. What I do is, if I enter here, where's the previous swing point? Yeah, kind of right here, but really right here, right? So right when price gets back up into that level, stops are moved to break even, partials are taken. So if price comes all the way back down like this, well, then at least I'm covered. And it ended up actually rolling over. So that's really good that I did so. Any take profit after that is based upon what the market is telling me. It's not based upon, am I up a 1 to 2 or 1 to 3 or 1 to 4? It's not based upon that. It's about what is the market actually telling me. So if I just zoom out here, this would be that level in which price could potentially go short from, if it's going to, right? We don't know if it's going to. We knew it was currently bullish at the time. Price could have easily just made a higher high. Obviously it didn't, but if we were going to go short, that supply and that imbalance would be that level. So that's where we would look to take more partials or even overall take profit, right? So try to, if you guys don't already do this, and this is really what has helped me really make a lot of money in Forex, is not leaving money on the table, but also covering positions when necessary. So don't go based upon, I want a 1 to 5, right? I'll take profit when my trade hits a 1 to 5. Well, what if a 1 to 5 is up here for you and the most valid level to take profit from is right here? Well, then you're screwing yourself because you're taking profit at a random level that doesn't even make any sense, right, in the market. So don't go based upon numbers or percentages in regards to take profit. Go based upon what the market's telling you. In terms of risk to reward and making money, obviously go based upon ROI. Your risk to reward, right? Because percentages make money, not pips. That's why it's so important to keep your risk the same. If you guys don't use like position size calculator on Google, I would highly recommend doing that. Keeps your risk very clean. So anyways, we just look at the structure. High, low, failed to make a higher high. We actually came into a 1 hour time frame imbalance. And then we made a lower low. The reason why I took this trade from this level of supply here is because really for one reason only. The reason that created the go ahead for my trade was because we made equal lows. Now, the reason for this is not just because we had equal lows. I'm not looking for equal lows every time before taking a trade. That's not what I'm saying. I'm saying that we are still overall bullish at the current time. So what if price did this? What if price wicked below it, pushed right back above it, and had that huge bullish engulfing candle? That could tell me this could just be a liquidity run, a sell to buy, and a continuation. At that point, I never would have taken that trade. But because of the fact that we created equal lows and on the lower time frame broke structure, once we pulled back into the level, there was just strong conviction to go short because of the fact that we had to target these lows now. So that just gave me more confluence to short off, and obviously it did roll over to the downside. Okay, so did make 2.82%, so not a lot on this, just because this is more of a hedge because we took profit at the level in which we bought it from. So 2.8 minus 1 is still 1.8. I'm still may have made money on this particular pair, so I'm not at all upset about losing. And even if I did lose in aggregate, right, I still wouldn't be upset about losing, because we have to understand, guys, you're not going to win every trade. You're not going to hit home runs every single time. Just take it on the chin, lose a couple trades, understand it's a part of the process. You're going to fail. It's just how it works. And we keep moving on. We have to maintain good psychology, because the second we don't is the second the market takes advantage of us. GBP AUD. So with GA, there's really not a current trade set up here, but I could possibly see one forming. What do we notice about this price action right here? Well, what we notice about it is that it is potentially could become an accumulation, right? We're just making discrete lower lows and lower highs very pretty. And we're actually forming this sort of trend line at the moment. So buy side trend line. I'm going to make that more pretty. So if we extend it across, one touch, two touch, I'm sure retail is probably going to be selling upon this third touch if they haven't done so already. But that is where we have buy side liquidity resting. So we're forming just discrete higher highs, or excuse me, lower lows, lower highs. And now we have sort of made a high. We have failed to make a lower low coming into this demand. And now we're potentially looking at creating a higher high. If we make that higher high, that would be good for pullbacks to continue long. We have officially accumulated, and that's why we have this blue box. This blue box is a higher time frame level of demand. What else? Well, we're overall bullish. We're making a higher high and a higher low on this higher time frame. Overall pullback, higher high. Overall pullback, could be looking for a higher high. So we're coming into that last point of return. That last point of demand. It's better seen on a lower time frame. But the reason why I have this black horizontal line is to show that if we come and hit this black line, we would pretty much be taking out that low, and we could potentially be breaking structure. But we're still maintaining our structure, right? We've actually retraced about 99% of the way. But we're accumulating in that lower time frame level of demand in which was created after the liquidity run was taken. That liquidity run pushed back to the upside, kind of repriced and continued. So if we get that breakout to the upside, a firm breakout, I would definitely be looking for pullbacks to continue long. Pound is still strong across the board, as we can see. GBP CAD is pushing higher. GBP Swiss franc is pushing higher. Euro GBP is pushing lower. GBP USD is pushing higher. I don't want to fight this correlation. So I will be looking for longs. At this current time, there is no setup, but we can already kind of have an overall bias on hand, not have a predetermined bias in the sense that we have confirmation bias. Because if price does something like this, and then goes like that and pushes right back down into the range, well, there's probably no trade to be had, because this could easily just be a liquidity run for a continuation lower, right? So we'll have to see what price gives us, what the market's telling us at the time. So that's GA. We're going to be looking for long, just not at the current time. GBP CAD, I'm going to deem this now invalid. I talked about this on yesterday's daily market breakdown video. I actually sent it in my free Discord channel for those of you who took a look at it. I talked about this level of demand in here, about the liquidity run that occurred within this current uptrend that we're forming. We are overall bullish. Excuse me, I can't get my words out. You can just see the overall trend here. Overall bullish. I really want to be coming into our higher time frame objective. Yes, we had a counter trend short opportunity. We're still in this trade. I have taken a significant amount of partials off the table. I've taken partials when we've taken out the previous swing point. I've taken partials when we came into a higher time frame demand. Then I had my overall last runner down to 1.58. Obviously, that's probably not going to be hit. So, oh well, I'm going to let it hit, stop at break even. You just have to maintain your good psychology. So we have broken above previous structure, right? Low, higher, high. So we need to be looking for overall longs. UP CAD, you can just see, pound is extremely bullish. So this is probably invalid now. I just don't think that if price is going to come all the way back down into here, I mean, let's just use common sense, guys. It's probably going to continue lower, right? We oftentimes don't see 99% retracements. That's just not how it is. Unless, we have a clear counter trend that we come into, we form equal lows prior to it, we sell to buy into it, and then we break structure. You could go like that, but I mean, who knows if that's actually going to happen. So at the current time, there's really nothing to talk about. I mean, this could become a potential level in the future, that level of demand, but at the current time, I don't really want to mess with it. GBP Swiss franc. Beautiful. We had that entry. So if you guys did not get into this yesterday, I'm talking to my VIP members because, obviously we didn't have a live session yesterday. You're in really good profit. I actually got the fill on a lower time frame, but that's okay. Came back down and got back in. And I still said this was a valid entry because it didn't quite hit the level and we broke counter trend structure, meaning low, higher high. So we have taken out previous structure. So that actually gives us a reason to have that overall pullback, right? So that actually makes that level still valid, or at the time when we were pulling back into it. So now we're seeing the continuation. So we are looking for continuations to the upside. I will say this, guys, we are looking to hedge this position with shorts. There is an area of supply in here. So we had obviously the clear uptrend, the clear buy side liquidity run, the clear fall, and then the failure to make a higher high. And that's where we fell and made the lower low. And that's where we started the downtrend. So this is an area in which we're looking to hedge. I will highly advise, if you are not currently in any particular buy in here, and I'm not saying just buy it now for the sake of getting in, please do not do that, guys. If you are not in buys currently from our levels that we called out before, whether that be this one, or our new one, so either of those three, do not hedge this position, because this hedge position should be taken, hence the term hedge, if you're already in another position in the opposite direction. Because if we go on a higher time frame, we will see that we are not forming higher highs, but we're not forming lower lows. We can kind of see that we're stuck reacting off supply and reacting off demand. So there's no current trend at the moment. So we could go like this, where we fail to make a higher high. This could just be a pullback to continue short with this trend. And we could start to form a bearish trend. However, we could also, because of the fact that we came into demand and had a reaction, could end up continuing to make higher highs and higher lows. So there's really no telling at the moment. We have beautiful areas of supply and demand. So this is where we can be looking to hedge our positions. The current trend is bullish. We've actually accumulated, right? We've accumulated in price coming into that demand level. So we can continue to be looking for buys until we reach this level. Now you can hold runners for sure, but take a lot of your position off the table here when you're in buys, and hold your runner obviously up to 1.16 to create that higher high. However, since, of everything I just said before, we're actually going to be hedging our positions most likely from that level of supply in case we end up rolling over from it and going short. So like I said before, if you're not already in buys, don't look for shorts. Just move on to another pair, guys. There's always going to be new setups. Please do not be stupid. Okay. Use common sense. Don't risk anything that, you're not able to lose. So that's GBP Swiss franc. We had a beautiful trade opportunity from here. The reason for that is, well, for one, we had a few levels. One was our level from 1.18. This is where we, broke out of the accumulation. This is where we broke the counter trend, right? We created equal lows, sold to buy, broke the previous swing point, made a higher high. So we naturally expected pullbacks to continue long. So that was a really, really nice trade into that level of demand here. We ended up creating another higher high in the process, creating two more levels of demand here and here. Obviously, our first one was met. Our second one was not. This is no longer valid. We came into that level and in the process created a clear counter trend on a lower time frame. You guys can see it on probably like the 5-minute, but you can see that green candle. If I zoom in, you guys can see that green candle. Well, that is lower time frame supply. So that was the pullback. We sold off. We pulled back into it, had the reaction, failed to make the lower low, and that's where we stopped, made the higher high. We were already expecting that anyways because we already came into our higher time frame demand here. So that's where that repricing event took place. That's where I got the fill lower time frame. I had my entry at 1.12735, which is why I got it, to account for a little bit of the spread because GBP Chef does have a higher spread than normal, at least on my brokerage account. But we actually ended up coming back down and getting the full fill on anyone who did not get the fill originally. So you guys should be up a really good amount at the current time. Stops below this low, up really good amount at this time. So continue to hold into that overall supply level. Really good trade. GBP USD, I'm not going to discuss. GBP USD is no longer valid anymore. NZD USD, I still think that we could come back down. This was just a level in which, so the reason why I had this level here, guys, obviously you don't want to be selling at supply in a bullish uptrend. Neither do you want to be buying at demand in a downtrend. The reason why I had this was because I was hoping that we would not touch into this level prior to coming into here. Just like I mentioned before on Euro GBP, right, about overall objective. If we don't come into objective before pulling into an area of interest, well, then the area of interest is really valid because at that point we have more room to go to the upside. However, we came into the objective, but that doesn't mean I'm not going to be looking for buys. I mean, we're clearly in an uptrend, right? This was our overall pullback. This is an expansion. We could see an overall pullback down into our level 6.3 or 6.265, right, for continuations long. So that's why these higher time frame levels are definitely still valid. We just missed our first level here on Thursday of last week from CPI news. So this is still these two are valid levels for sure. It would just be one of those things where we have an overall pullback, right? Expansion, pullback, expansion. So this may take some time, but we're going to keep them open for a little while. I don't have any current trade ideas for you here, just because it's extremely bullish right now. There's really no clear area of demand or any institutional liquidity runs that formed. Same thing with GBP USD. We're just mooning to the upside. AUD USD, yeah, we could have an overall pullback, but at the current time, we're just continuing to push. So we're not going to fight it, right? USD CAD, we're kind of just consolidating at the current time. Overall, we are bearish. I really want to come into this sell side liquidity. This low is not taken out. We also have equal lows in here as well. We have this level at 1.321. This is a higher time frame swing that we have not come into. This is the low that generated this new higher high. This is just an overall pullback that we're in. This is the prior last selling volume. So I do think that it would be really good, in our advantage to be looking to continue to sell this. We have sell side liquidity here and here, and we also have this unmitigated demand level. So any selling that we can be doing, obviously the dollar is bearish. We need to continue to be looking to do that. We need to be, looking for sells into that level. That's a good objective to have. So lower time frame, scaling here. We have sort of distributed in price, and we have broken the counter trend. So we're looking to continue to push lower into that objective. So where could we potentially be selling? Well, we have two levels here. Obviously, we have failed to generate a higher high. We came into a lower time frame supply, and we fell and made the lower low. So now this is the new range of the market. We need to be looking for pullbacks to short off. So we have this little repricing event here. You can see that green doji candle on the 1 hour. So that's our first level of interest. I think I may already have this in the spreadsheet. If not, I'll add it later. But then, obviously having that entry, having a stop loss above that high, that would be pretty big in the sense of risk to reward. I don't care how big my stop loss is in terms of pips, because obviously pips doesn't matter. But in terms of risk to reward, if I'm going to be selling here, placing stop loss here or the take profit of here, that's really not going to be good enough in terms of risk to reward. So it really wouldn't meet my rules. So in order to mitigate that, I have another area of interest that is actually valid as well. It's 1.36, it's a psychological level. It's just lower time frame inefficiency, this imbalance here. So first entry could go here. The stop loss for this entry, and I usually don't give this out, but for the sake of learning, I'm going to explain as to why I'm doing this. The first entry could go here. The stop loss for this entry could go at the second entry position. So at the same time, if price does come up into 1.36, you would get stopped out in your first position, but then you would get triggered in your second. And obviously your second stop loss would be right above this high. It would be really good for risk to reward purposes, but at the same time helping you so that, let's just say your stop loss is like right here, you would, hit your stop loss, but fail to come into your second level and then get screwed over twice fold, right? So just kind of helping to mitigate some risk, splitting up your positions, but doing it in a way that's appropriate. At the current time, I don't see anything in here. Just looking for overall pullbacks. If we get it, great. If not, whatever. We'll move on. USD Swiss franc. So had that beautiful reaction from our not our sponsor candle. Why is this not a sponsor candle? Just answer that in your head. Okay, I'm not going to tell you why that's not. It's quite easy why that's not a sponsor candle. So overall, obviously the dollar is extremely bearish. We're making lower lows, lower highs. Our previous swing, and I know it's hard to see the swing points, guys. And this is really where I say, be careful when it comes down to breaks of structure when you're, clearly downtrending or clearly uptrending. Meaning this, when you see this strong volatile move, this green candle here, what do you think that candle is? Is it actually a break of structure, or is it probably just a liquidity run to continue short? So just be very careful with that. That's why the market entices you to take positions in the market, right? You have all these lower lows and lower highs, and then one candle you break structure. You think that this is a bottom in the market? It's probably not a bottom in the market. We haven't even come down into objective or any sort of psychological level whatsoever. We're clearly in a downtrend. So don't be so quick to look to reverse trend and shift your bias, right? Just because we may have broken the structure doesn't mean it's important or imperative for us to look for longs. I mean, you could, but where would you buy it into, right? That's just, there's no objective anywhere. Now, if there was like a clear, a clear sponsor candle, like we created equal highs, we bought to sell, and then we created these lower lows, lower highs, and we broke, and we didn't come up into that sponsor candle at first, and then we had a clear level of demand here, we could potentially buy it into that. That would be valid, but there's no objective anywhere upon this break of structure. And this simply was just an overall pullback for a continuation, right? Just an overall pullback, fall. Doesn't look like it, but it is. So lower time frame, we have swept liquidity here with that move. We have repriced. We continued. We broke the structure back to the downside. So obviously, when we break structure back to the downside in a downtrend, you can have common sense with that. We're probably going to continue to go short. So we look for our area of interest, and there's not always going to be an area of interest, meaning there's not always going to be a trade. In this case, there was 93493 or 9350, and we are in really good profit at the moment. I have to update the spreadsheet with the new amounts because I think when I went to bed last night, we were like right in here or something like that. I don't remember. But in more profit, 0.9 is our overall target for a nice 1 to 5.82. NZD Swiss franc, we are in good profit here. And I sent this out. I literally gave this out in my free Discord channel because it was so freaking easy. I said this here. I haven't posted here in a while because I save everything really for my VIP members. But I sent this out. I'm like, we're going to be looking to buy here. There's so much confluence for this level of interest. And there's the same for AUD Chef, which I'll go over in a second. But clearly, there's so much confluence. However, what does that mean? That means just because we have clear confluence for a particular trade does not mean we over leverage, guys. Please do not do that. Do not be a peasant. Do not do that. I'm just being straight up with you. Don't be an idiot. Be a professional, right? We need to be maintaining good risk management no matter what market condition we're in, no matter how good the setup looks, because what if price just reverses here? I'm not saying it's going to, but what if it does? It could. The market's never 100%. It could just turn around and go like that. So if you're over leveraging on positions that you just have so much conviction for, and you normally risk like 1% per trade, but then in this case, maybe you risk 2 or 3%, well, and then you lose that trade, well, you're just not treating it like a business. You're not treating it like a professional career. We got to be better in terms of that. I've seen so many people over leverage and blow accounts, and it's just, there's no reason anyone should be blowing accounts. There's no way that you lose 100 trades in a row. If you're risking 1% per trade, that would require 100 trades in order to blow that account. I don't know of anyone who's lost 100 trades in a row. It's quite frankly impossible. You can't get that unlucky. So there should be no reason why anyone's blowing accounts. And I'm just being straight up with you guys. You know, I'm very straightforward. I don't sugarcoat anything. How you end up becoming a professional trader is me being very strict with you, me telling you what the deal is, me not saying, oh, okay, it's okay, guys, you know, just do your best. I'm not going to do that because that's not helping you. That's why I don't flaunt, you know, all my lifestyle. I don't do that because how is that going to help you learn? It's not. It's just going to provide you with some dopamine rush when you're laying in bed at night watching a lifestyle video. It's stupid. So, sorry for the rant, guys. I apologize. Sometimes I do that. I got to get back on track. Anyways, higher time frame. Yes, we are overall bearish. However, the current trend is to the upside. We're making higher highs and higher lows. I'm not going to be fighting this trend because, you know, since the counter trend has shifted back to the upside, I am looking for overall pullbacks for continuation short. So I'm not necessarily going to be selling from this level in which I'm taking profit from. However, I could be obviously for one, taking profit here, but looking for potential shorts if we get confirmation. So where's the higher time frame structure? Really, the structure started here back in 2021, lower low, lower high. Actually, wait, no, maybe I'm wrong. Started here, sorry. Lower low, lower high, lower low, lower high. This is the lower low. This is just intermediate supply, just like this is intermediate supply, but this is the overall lower low. So if we're having an overall pullback, where could we pull back up into? Well, to try to figure out where discount and premium lies, well, we have to just pull a fib. And we don't trade off of fibs. We just use it for confluence, right? So, you know, 61, 71, you know, that's a really good level, maybe 78.6, just getting back up into this premium level to be potentially looking for shorts, but at least targeting these levels when we're looking to buy, right? So I'm going to go over this quite quickly because I'm running out of time here. So NZD Swiss franc, higher high, higher low, higher high, higher low. We've come into a level of demand. I won't go all into that. I've already discussed that plenty of times before. We have accumulated very nicely in here, and we have finally broke out of the accumulation, which is why on a lower time frame we had two potential levels. One was right in here, and one was right here. So had that level, very nice. You know, we didn't get the full pullback down into our secondary level, but we can see the accumulation. We failed to generate the lower low, and instead starting to trend to the upside, making higher highs and higher lows. Again, we kind of reaccumulate, blast off to the upside again. Where is our most recent structure point? Well, let's just break it down. High, low, high, low. I mean, it's so simple, guys. We don't have to complicate it. It does not need to be complex terminology and complex concepts. And, you know, the more complicated something is, doesn't make it easier, doesn't make it better. The more simplistic you can take real world scenarios and real world concepts, the better it probably is. Because if those who are able to dummy it down are those who are the ones who actually understand what's going on. So this is our most previous level of demand. I'm not going to go into all the volume that was associated with this level, why this was valid to begin with, but that was just in layman's terms demand level that we wanted to look for reactions from. So we were already in positions from this level. What happened yesterday was we formed this retail trend line. 1, 2, 3 touches. How many retail traders do you think are buying in here? Probably a lot. So what happens to them, right? They over leverage because they're retail traders, and then they blow their account. So now they have to go back and live with their parents, right? And now we can get back into the market here, and now we can be living in penthouses. You see? And I'm just trying to create a laugh with you guys. I'm just kidding. Not trying to sound like an ass, but that's the truth. Retail, we want to be taking advantage of what retail traders are doing. So they're creating liquidity for us smart money traders to get into the market. Obviously, these institutions can see the order book. They already know that there's liquidity resting below these lows. And for one, they're not trading price charts, guys. Like I said before, institutions, they don't look at price charts. They look at, they have their algorithms. They have, the order book. They know exactly where all the volume and liquidity rests. So when they place positions based upon, the numbers, it's directly reflected in the price charts, because obviously we don't have the order book, so we can't see that. So we have to go based upon the clues that they leave behind. So smart money, and this is where, someone said to me, oh, smart money is going to become new retail. Smart money is not going to work eventually. those people don't know what they're talking about, because smart money is not a strategy. It's the underlying nature of how the markets move. And they will forever be like this, because this is how any market at any point in time in all of history has to move. They have to have a buyer and a seller. That's how a market is formed. That's how bartering was formed back in the day. Back in, I don't know, ancient Egypt. How did they exchange goods and services? They bartered. They exchanged one good for one service, one buyer, one seller. It's the same thing. It's just people, saturated with all this bullshit in the market. All these bullcrap traders out there who think they know what they're doing, but they don't, and they complicate it. It's unnecessary. Anyways, trend line liquidity snagged into demand reaction. Let's scale into a lower time frame. Please don't take anything I'm saying personally, guys. This is just who I am. I'm very straightforward, and I really love I love teaching, and I know I can be harsh, but that's the reason why our community does so well, is because they get the information and they don't get sugar-coated crap. They get the real stuff, and that's why they're succeeding. So anyways, counter trend, low, high, low, high, supply, failed, higher high, turns to demand. Beautiful entry. Sweeping liquidity from London session. Again, retail formations. I didn't even know this was going to, I kind of figured this would form even before it did. 1, 2, 3 touches of this trend line. Boom, boom, boom. Sweep liquidity again, continue to rise. So, this is also another thing. Trend line. If we extend this over, what is this? It's a break in retest. Oh, let's go short off of a break in retest. Nope. Retail loses again. So that's where we can see the clues that these institutions leave behind to take advantage of these easy setups. And it doesn't have to be complicated. We just have to be patient enough to wait for these to come around, right? So continuing, we're going to be looking for further upside. Obviously, I am break even on my original position here. I still have this position down in here, 58527, because we didn't hit the first one originally. This was really where the last selling volume started, but we had one from here. I'll just have to reevaluate that. I probably will deem it invalid. So yeah, I'm not going to be taking that anymore just because we're continuing to push higher. UJ, I really don't see much on it. We had our 2 levels, higher time frame, supply, and just for the sake of time, I'm not going to go into this entirely. Overall, we're in a downtrend. Supply is in here. Lower time frame, we swept liquidity here, and we had that break of counter trend structure. You see all these higher highs, higher lows. We repriced, we shorted off. We ended up not pulling back up into our level, and I think I did mention this level on a breakdown video, but I can't find it within any of the VIP trade analysis, so I'm not going to add it to the spreadsheet. But if you guys did take it from that level of supply, then congrats, you guys are in really good profit. Continuing to short this, dollar is weak. AUD CAD, for the sake of time, I'm not going to discuss this just because it's probably not going to come into fruition anytime soon. I guess I can really quickly touch base on it. Overall, we're in an uptrend. This is the lower time frame trend. If I scale out, this is the higher time frame trend. This is still a valid level. The sell to buy that we talked about a while ago, that's still valid. If we have an overall pullback, this is not a break of structure. It's just an overall pullback to continue higher, because where's the trend? High, low, high, low, high, low, high. That's really where it is. So that candle, that liquidity run that we had, the manipulation sponsored move, that's still valid. Lower time frame, we can continue to take advantage of these moves, which we have been. So lower time frame is this demand level in here. We sweep liquidity, counter trend, low, high, low, high, low. Higher high creates the demand lower time frame, and I think if we scale into the 5-minute here, you'll be able to see that demand to supply flip. Supply to demand flip. Low, high, low, high, low, high, low, high. Supply, right there. Doji candle, reprice, continuation. That's where the demand is. So continuing with the lower time frame, the same concepts apply on every single time frame. So we've created that higher high, pull back into this higher low, in which we swept that low and these lows, so creating more liquidity to the exact T. If you know the levels, if you've had the experience and had the practice, it's relatively simple, but at the same time, you get these wick entries. I didn't trade it from there. I'm not going to claim I did, but that's where you would probably have looked to take a trade. Now, what I'm looking for here is simply the same thing. Low, high, low, higher, high. Counter trend, low, high, reprice, continue. Liquidity. If we have an overall pullback, it would snag those equal lows, come into our repricing or demand, and look for continuations long. But we have to keep in mind the higher time frame, right? What is the higher time frame showing us? Let's scale out. Let's see. So we are looking like we're probably going to come and take this previous high, 952, potentially 9518. So there's really nothing stopping this. So that's why I think this is still valid at the current time. So if this trend continues, great. We can continue to look to buy it like that. If we end up breaking, this is not a break of structure. It's just an overall pullback into our other level here to look for buys from sort of this time frame. And if we get a break of that, well, then we're probably going to have an overall pullback into lower time frame, or higher time frame imbalance and demand, in which we accumulated higher time frame and broke the higher time frame structure. So we could see stuff like that. So overall, we're bullish, and we want to be continuing to look for buys. We'll just have to see. AUD NZD. So I have two levels on AUD NZD. These two in here that I'll talk about. This is our objective, not really for selling, but for looking for, to take profit, essentially. That's our most recent supply. We haven't come up into that 1.0950 psychological level. So two levels here. Just our first level of demand, half risk and half risk. Obviously, we didn't quite come into it the first time. So we have a level there looking to continue to buy. Aussie is still strong. This is more of a corrective nature trend. This is not, a very strong push. So with corrective nature trends, we usually like to see, follow through back to the upside. But we'll have to see. Who knows? Maybe we get a deeper pullback, and in these lower time frames, we lose on them, because we had to lose eventually, right? The reason why we've been doing so well this month and the start of the year, really for the past 9-10 days, is because we've been playing off the lower time frames, and they've been continuing. Obviously, when the lower time frames break, yeah, you naturally will lose a couple trades probably. But that's when you can zoom out and look at the higher time frame and see that direction, and then take trades based upon that. And then when the higher time frame comes into fruition and we get reactions, and then a new lower time frame starts, then we can continue to take advantage of that. But anyways, we're just going to continue to take advantage of the lower time frames until it breaks. Heck, we may see a break. Who knows? Oh, well. Anyways, that's still valid. The reason why I have this level is because you can see the wedge formation, retail formation. See this candle here? We broke out of the wedge, enticing buyers. Came back down, hit their stops to the buyers, enticing sellers below this wedge breakout. Nope, right back to the upside. Again, enticing more sellers in here with this break and retest. Nope, right back to the upside again. So that creates the demand. So looking for price to, well, we're already in it. We're in a little bit of drawdown at the moment. Stops are going to be at the secondary position, and then stops here, we're just going to go right there for that trade. So we'll have to see what happens. I mean, hopefully we go long. If not, oh well, we just reevaluate later. Last one, AUD Chef, very similar to NZD Chef. We are still overall bullish on this pair. Higher time frame objective will be 6,620, most recent supply level. I know it's blurry, guys. I'm just zoomed out a lot, so I'm not expecting you guys to look at this. This is just to get an overall view. Supply in here, and then higher time frame supply at 6,840. Okay. If we scale into the lower time frames, obviously we're trending to the upside. We have come into a level of demand in here that we took advantage of. So we're currently still in this trade. We're at break even at the moment, continuing to look for setups. On the 30-minute, if we scale into this selling volume in here was the last selling volume before this huge expansionary move. And you can just see that imbalance move, just straight buying volume in here, very strong. This is 8:30 or 8 o'clock. 8:30 a.m. Eastern time. This is New York session open, right in there. Okay, so we've created the higher high, which is right there, the higher low, and then the overall higher high. So what do we naturally expect? Some sort of higher low, right? So we've come into that level. Same thing with NZD Chef. We have the sell to buy into an objective, the repricing, the continuation, the break of structure. And we have a lot of buy side liquidity resting above here. So that's just more conviction to look for continuations long. So repricing event, looking to come into there, which we are in a little bit of profit, probably around break even right now. But looking for continuations to the upside there. Okay. Other than that, I don't see anything. we've already hit this area of demand, this level of demand we're already break even from. So if price ends up just breaking, well, then we just leave it alone. There's no other areas to look for buys at this current time. So I just wanted to give you guys an update on that. That's pretty much everything I have. So hopefully you guys learned something. Let's see. Any other questions you guys have at all? If you guys are good to go, then that's all I have for you guys. Hopefully you learned a lot. I'm going to be updating the spreadsheet here soon, so you guys can keep up with that and all the trades that we talked about today. Let's see. Why not use paper trading on TradingView? Guys, I'm just trying to provide transparency. Okay, I've created audit videos before. I'm trying to use this track record. I'm not sure what else you guys want from me. Like, what do you want? You want to come to my house and try to check how much money I have? Like what else do you want? Like, it's really frustrating when you guys are asking for more and more stuff. I'm trying to give you as much as I can, and I'm breaking down all these charts. So obviously, if I wasn't a real trader, I wouldn't be able to do that. AJ thoughts? AJ is not really a pair that I want to be trading at the current time. You can just take a look. I mean, overall, we're bearish. I would definitely be looking for shorts. We have a lot of sell side liquidity on AJ. We're still trending down. The yen is quite strong at the moment. We had a huge buy to sell on all these XXXJPY pairs. Yesterday night during Asian session, I noticed a huge manipulation push the upside, and then we had the follow through back to the downside this morning. So I would probably be looking to sell it. Personally, I don't see anything at the current time to enter, but it's up to you. All right, let's see what else. Suggestions for re-entries. I don't really re-enter unless a clear re-entry is formed, like the same sort of setup, right? So everything I just went over, if you guys are missing trades, then you will need more confirmation before another area is available. It's not just like you miss an entry and then you're looking for re-entries and trying to just find something. It's not how trading should be done. So, I mean, I don't really have any rules for re-entries. It's just the same sort of technique for any other trade. I mean, if I just present my screen here really quickly, go into let's say NZD Chef, right? So if you didn't catch this entry or this entry down in here, well, then this would have been a good re-entry here. But why is this a re-entry point? It's because of the fact that we had all of the other confluences needed for a new trade. Let's just say you didn't get into this trade. Where would a re-entry be? There's no re-entry. There's no confluence to tell you to trade again, right? You treat each trade individually. If you miss a trade, the only way you would get into that same pair and trade it again or trade it the first time is if another setup presents itself. So we would have to see, maybe higher highs and higher lows, maybe some sort of equal low liquidity run, higher high. That would be a good re-entry point. But at this current time, you can't just take re-entries for the sake of it just because you missed it. It's just not the right mindset to have. So, that would be a good re-entry because we had the liquidity run, sell to buy repricing, counter trend has been broken to the upside, new higher high has been formed, pullback, sell side liquidity has been taken in here before London session. So that was the good entry or good re-entry. So hopefully that makes sense to you. Alrighty, let's see. Other questions. In a bearish market, if a previous high formed a supply level but failed to make a lower low, does that mean the previous high supply is invalid? And just make sure I'm reading this correctly. Hold on. The previous high formed a supply level but failed to make a lower low. Does that mean the previous high supply is invalid? Yes. You want to see a lower low formed before pulling back up into that supply, right? You want to treat it like market structure. So just because you form a supply level, just like this, I'll just show you really quick. Just because you form a supply level here right? In a bearish downtrend, let's say you're going like this. Let's just say that you form a supply right there. You've reacted off supply. You've created another repricing and a short off. So that's supply. Well, where's the range? It's not in here. It's right here. This is the previous range because we haven't taken out this low yet. So this is still the range. We're still trading within that range. So what if price goes like this? Could it do that? Sweeping liquidity, coming up further into this supply before falling? Sure. So you need a lower low first before looking for a pullback, because when you have the lower low, then now you can expect price not to come above that previous swing point. So making this supply valid for shorts. So it's just the perfect example with USD JPY, right? Or maybe right here. Just because, and this is not really a good example. Let's just say that price never made a lower low, right? This would be supply. And we could see that this would be still the range of price. So we could be looking to pull back, taking this previous swing point, coming up into supply and still maintaining bearish structure, right? So that's why we had that liquidity run. So in all reality, like I said, you need a lower low before, pulling back up into supply. So that's why, since we've made this lower low here, I was looking for that pullback into that supply level right there, right? All right, what else we have? I got to head out in a couple minutes, guys, but I can take a few more questions if you want. Let's see. If a person is serious with this job, can you give the number? I'm not sure really what you mean by that. Sorry. Appreciate all the knowledge. Yeah, no problem. No problem at all. Love it. Appreciate the love. I love doing this, guys. I love teaching. It's one of my favorite things to do besides trading. How do you choose the right place to buy or sell, which is the best? That's a very broad question, Ryan. That's something that I can't answer on this call. There's no direct answer to that. There's not something I can just tell you and then you'll just automatically know. It just comes with practice. It comes with understanding the entire strategy and top-down analysis in each time frame on its own. So that's a very, very broad question. So I'm sorry, I can't answer that. You really want to be buying in discount, selling in premium. So if your order blocks, if you want to call them that, if you're in a downtrend and you're selling at a discount, well, you don't want to be doing that. You want to be selling at premiums. You want to be looking for order blocks at the previous swing points, stuff like that. That's just the most basic answer I could give you. Alrighty. I think that is it. That's all I have for you guys. Any last minute questions at all? I can help you guys out in any capacity that I can. Keep up with that track record, guys. I try to provide full transparency. I guess apparently it's not enough for some of you, but I don't really have to prove anything to anyone, and I'm already doing so with this track record. So continue to follow that. That's what we have. I'm also, if I just kind of share my screen here, everything that I'm sending out to you all comes with a piece of analysis. You can even look at it. If I send a before trade, right? And then price either plays out or it doesn't, isn't that really proof enough? I really don't know what else to give you. You know what I mean? I'm trying my best to provide transparency. Just because, let's just say that I make, I don't know, $2,500 on a $250,000 account, right? On a prop firm $250,000 account. $2,500, that's 1%. Okay. But many people would think, oh, $2,500 is a lot of money. But what about someone who has a $1,000 account who made $100? Well, obviously, because people don't really understand how investing works, they will probably think, oh, I'd much rather have the $2,500 than the $100. But the person who made $100 made 10% versus the person who made $2,500 made 1%. So that's why I say, guys, when you guys are on social media, don't be so attracted to all the dollar value profits that you see. Don't be attracted to, oh, wow, this person made 10 grand, 20 grand in the trade. first of all, they're probably over leveraging. So they're not even a real trader to begin with. And two, it's probably, if they aren't over leveraging, it's just using good risk management on a larger account. Doesn't mean that lower account sizes can't make a good return. I mean, I could open up $1,000 account right now and take that to $100 to $200 in a month, probably. It's not a lot of money, but it's still a good percent return, because if I can do $100 on $1,000 account consistently, then I can easily do $10,000, or excuse me, $100,000 on $1 million account consistently. It's the same percent return. That's what makes the money. So just hopefully you guys go into that. I mean, that's why I don't flaunt profits. That's why I don't flaunt everything. I have the proof in the pudding strictly on the charts. I give you guys the analysis and I keep up with the track record. And hopefully you guys would understand that. Let's see, when hedging for short or long, if one end up losing, would you take the other one? So if you're hedging, you need all the confluences for both sides of the market, just like we looked at GBP Swiss franc, right? If you're longing, right, you can't just turn around and sell it, right? There may not be a reason to hedge. You only hedge at specific times. And that's something that we're going to be divulging deep into talking about in the course. The one that's coming up soon is, I mean, obviously if you're hedging, if you have two levels in which like the higher and lower timeframes are not in alignment with each other, for instance, and you're buying and then you have a supply level for sells, well, yes, you would take both of them. If one loses, you would take the other one, right? So hopefully that answers your question. If one ends up losing, if it comes back up into your hedge position, you'd probably end up taking it because you had a reason to hedge it in the first place, obviously when appropriate. All righty, guys. Well, I'm going to take off. I appreciate your time today. Stay tuned for Saturday's live session. We're going to hold another one breaking down all the pairs for the upcoming trading week. So I really do appreciate your time, guys. Thanks for hopping on with me. And VIP, I will be in contact with you guys throughout the day. So take care. Have a good one.